Welcome to the new post budget episode of Budget Insights series on EY India Insights. In this episode, we discuss the key direct tax announcements in the union budget, including changes related to income tax, TDS, TCS, and compliance requirements, along with the introduction of the new income tax effective April 1, 2026. Joining us is Jayesh Sanghvi, tax partner at EY India, who shares his insights on what these changes mean for individual taxpayers and businesses. Hi, Jayesh. Thank you for joining us today.
You.
So, Jayesh, to begin with, what were the major direct tax announcements in today's budget, especially around income tax, TDS, and TCS rules and compliance changes? How are they expected to impact individual taxpayers and businesses?
You, Pallavi, I think, we see. So there was an agenda of the government to actually rationalize the TDS and TCS rules, and this was asked of the industry as well as taxpayers. Currently, TCS applies quite heavily on certain transactions when remittances are made by individuals, and that was leading to significant blockage of cash by the individual taxpayers because TCS applied at the point in time of remittance, and sometimes, and most of the instances actually you have to ask for a refund when you're filing a return of income. So what the government has done, at least on the LRS payments, which are relating to medical treatment and education, they've reduced the TCS rate from 5 to 2%. And for all the rest of the expenditure, rest of the remittances, it continues to be at 20%. But medical and education constitutes significant part of payments which most of the Indians make under LRS for their kids who are going overseas. So that's one. Secondly, on tour programs, overseas tour program packages. Also, the rate was 5% up to 10 lakhs and 20% above 10 lakhs, and that also has been rationalized to a flat rate of 2%. So this obviously will significantly save on cash flows of individuals who are making remittances. The other interesting factor is that when individuals are purchasing properties from non-residents, because of the remittances, you have to do a holding and TDS provisions used to apply because payments to non-residents are subject to TDS. But the simplified process of actually applying and paying this TDS wasn't available to the residents. I think a simplified regime is being introduced even for that. So I think this will simplify a lot the TDS, TCS applications and the provisions for the individual taxpayers. These are two very interesting changes which are, for ease of living for the individuals.
Thank you, Jayesh. Now, with the introduction of the new Income Tax Act coming into force from April 1, 2026, what are the key changes in compliance, filings, and direct tax procedures that listeners should be aware of?
So I think one of the compliance changes are not there in terms of timelines and deadlines, except for one case where they've extended by a month the return filing deadline for individuals who are not subject to audit and they have business income. They will be required to now file by 31st of August instead of July end. But besides that, the compliance requirements continue to remain the same. But what is expected now is that the law has been simplified significantly. So therefore, I think the law is very, very readable. It has been put in a very, very reader-friendly and user-friendly and language. So the language has been completely decluttered from a typical legal language. But besides this, the government is now going to actually release the rules and the forms under the new act. And the compliances will have to be undertaken under these new rules and forms. And it is expected, and that's what the government also mentioned, that these new rules and forms will also be very, very simple and will be made very user friendly for the sake of compliances. So I think we hope to see now the new rules and all of those things being released in the public domain for comments and inputs. And obviously, and that technology architecture at the back end will also have to be geared up from the government side. And obviously, the Indian compliance standpoint, all the taxpayers will also have to gear up for that. But we expect that that will be a lot more simplification in terms of how the filings will have to be done now going forward.
Thank you, Jayesh. And lastly, how do the direct tax measures in this budget, such as the adjustments to TDS and TCS, return revision timelines, and other simplifications, reflect the government's broader strategy on tax fairness, compliance, and the revenue growth?
So, Pallavi, I think one of the things is that this budget, if you look at it, it's not a budget which is, so a lot of things already got done. So we had the GST rationalization done. Just before that, we had the new Income Tax Act, which was released, which obviously simplifies the entire language. And obviously, the rates of tax, both on personal income tax and corporate income tax, over a period of time have been rationalized. So this budget, I think there was not an expectation it'll be a very transformative big bang budget because a lot of things have gotten done in terms of simplification. Now the thing is that how do you expand on a rationalized personal income tax rates and rationalized corporate income tax rate? How do you actually get more revenue collection because of the base increase? What typically has been seen is that over time that the transmission of the rate and the effect of that on expansion as well as increase in revenues take time. So we obviously this year have seen a dip in the revenue growth, but that will be made up only in the next few years because the benefits will of the expanded, base of taxpayers will actually only happen over a period of time. But the only other very interesting thing is that now having done most of the stuff on transforming the tax law as well as the tax rates, I think the government will obviously now pivot more towards better compliance and tax administration. So the tax administrative reforms are something which will kick in now, and that's what also government is expected to do, that they will try to actually, make the whole administration user friendly. And we've seen a lot of those initial instances of, the government trying to nudge taxpayers to actually rectify if they have been unintentionally trying to, make mistakes in their filings or they have claimed something wrong. So we will see a little different face of the government now when the regulator tries to interact and ensure that the taxpayer becomes more in their whole process how they actually comply and also pay their taxes and report the income.
Thank you, Jayesh. That brings us to the end of this episode. Thank you so much for sparing the time and joining us and sharing all the insights on the latest direct tax measures and the broader implications.
Thank you, Pallavi. Thanks for the time.
Thank you. And thank you to all our listeners for joining in to this post budget episode of Budget Insight series on EY India Insights. Stay tuned for more expert conversations on key budget developments.